on our guest who's joining us live on the show, Gautam Baid, who's an equity advisor at Complete Circle, Stellar Wealth PMS. Thank you very much, Gautam, for joining us. We want to talk to Gautam about the US election. It is nearing, it is approaching. We want to understand from you the impact of that election on India-US relations. How will trade shape up? Meanwhile, the sectors that will see activity, meanwhile, despite FII outflows in sluggish auto sector during the festive season, will there be a return of FIIs? Let's address all of those concerns and topics one by one. Now, first things first, since you are there on ground zero, tell us which way is the US election likely to go and what are the markets pricing as of now?
Anisha, I believe in what the markets and the prediction markets in particular predict more than what the opinion says. So right now the prediction markets are clearly in favor of a Trump victory. And the stock market, if you observe the stock market carefully in the US, even the market is primed for a Trump victory. So right now all the indications are that we'll have another 4 years of a Trump presidency with us.
Right, and Gautam, that's something that even the polls are predicting. This is a tight race between Trump and Harris, but many polls now predicting and favoring a Trump victory. But if in the event of that, if that indeed happens in November, how will a Trump victory impact India-US relations? On the one hand, he's a great friend of Prime Minister Modi and he's spoken on various occasions about the Prime Minister, but he's also called India Tariff King.
Well, Anisha, Trump is clearly a America first candidate, so I'm not too sure whether his presidency will be really good for India because he has often called India a tariff king, some a country which really imposes a lot of tariffs on imports. So Trump also plans to impose, significant tariffs on Indian exports into the US. So there'll definitely be inflationary pressures and margin pressures across the board if that happens. If you recall, the previous 4 years of the Trump presidency were highlighted by significant volatility in financial markets. In India, if you recall, during the Trump presidency, we had one of the biggest bear markets in small cap and mid cap stocks from January 2018 to March 2020. So I think we should, brace ourselves for a long period of elevated volatility in financial markets.
Right, absolutely. Long period of volatility is what you're hinting at. But what does it really mean for manufacturing sector specifically so far as India is concerned? Is that up for a derating?
Exports across the board are expected to be negatively impacted in case of a Trump presidency. This holds true for all the countries in the world. However, domestic manufacturing is a theme which has got a decadal runway. If you, clearly observe the announcement by the government of India, there is a clear focus and emphasis on boosting domestic manufacturing. And we have enough listed plays to take advantage of this particular upcycle in the domestic manufacturing, especially on the CNC machines and other turbine manufacturers. We have got enough listed plays to participate in the manufacturing upcycle. So I think the focus after next month's election result will probably shift to more domestic facing names and domestic cyclicals rather than the export oriented names. But within domestic facing companies also, you have to be very careful where you invest your money, because if you look at the trend in this particular quarterly earnings season, in case of consumer staples, the volume growth is very tepid and they are trading at very expensive valuations. In consumer discretionary, we are seeing down trading happening because unsecured lending is now becoming scarce. If you look at the banking sector, we saw what happened with Kotak Mahindra Bank and RBL Bank yesterday, both down 6% and 13% respectively after asset quality stress in the credit card and microfinance book of those banks. And within domestic facing industry, I think manufacturing right now and deep cyclicals with a focus on power and power transmission, I think those are the pockets where you will see sustained earnings growth for the next couple of years.
All right, so sectors which are export-oriented have some bit of worry so far as the Trump presidency is concerned, in the event of a Trump presidency rather. But Gautam, help us understand which are the pockets of sectors or the themes that you have identified or bought in this sort of dip?
Well, given that we have a coalition government at the center, we are seeing a lot of subsidies and populist measures, and a lot of doles being given out by the government to boost the rural economy. I think domestic agrochemicals is a sector where one should pay particular attention because the monsoon season has gotten off to a good start, and the agrochemical market in India is finally stabilizing after a prolonged period of declining prices. Currently, channel inventories in the distribution network are very low, and this provides domestic agrochemicals company with some semblance of pricing power after a long, long time. So within this particular industry, in complete circles, Telewealth PMS, we are holding a stock named Insecticides India. It's a play on the revival of the domestic agrochemicals market. 64% of this company's revenues comes from the higher margin specialized range of products, which the company calls the Maharatna range of products. The company plans to increase the proportion of the Maharatna range over the next few years to 80% or and above. And it plans to improve its EBITDA margins from the current levels of 10% to 13% over the next 2 years. This will be driven by both higher sales of the specialized products as well as the ongoing backward integration at its Dahej plant. And the valuations are also very reasonable at less than 15 times 1 year forward. So this is a stock which we hold in our PMS. However, the key risk with this business, as is the case with any other domestic agrochemicals company, is that they are heavily reliant on domestic monsoons, how the monsoons play out. That's why they do not get a very high valuation multiple.
Absolutely, Gautam, and we'll have to see how all of those factors really play out. But one big theme that I have to talk to you about is the FII selling that we've been seeing in the past few days. That's been the highest in over 4 years, according to several estimates from the industry. And that, of course, on the back of how the China story is playing out. But the question is, when do you expect that FII selling to reverse, and what are your near and long-term projections?
Well, you cannot really blame the FIs for cashing out of the Indian stock market at such elevated valuations. We have had CEOs of global MNCs very clearly stating on business television that they are trying to exit their holdings in India because they are getting very rich valuations. So right now, private equity players, promoters, the promoters of global MNCs are all making merry while the valuations are remaining very extended. But that has been more than made up by the huge surge in the domestic SIP flows. I mean, if you go back 10 years in time, if I told you that we are going to have 70,000 crores plus of FI selling in a single month, you would expect the Nifty to be down 15-20% for the month. And here we are barely down 5% from the all-time high. So I think this particular bull market in India is being powered by the individual investor. And just like we had a herding trade in quality large cap stocks in 2018 and 19, over the next few years, you may see a herding driven by these domestic mutual fund managers who are getting a lot of flows into their mid cap and small cap and thematic funds. You may end up seeing a lot of herding taking place in the quality high growth stocks in the mid cap and small cap space, and you may end up at bubble valuations in the high quality names in those two spaces. So be on the lookout for the next 2 years. You want to focus on high quality businesses with good quality promoters and visibility of growth, and you can definitely benefit from the valuation re-rating because this domestic SIP flow shows no sign of slowing down.
All right. So no signs of slowing down so far as domestic SIP flows are concerned, but that sort of correction very much needed given the kind of valuations that some of the stocks that are currently trading on, Gautam. But one final question before we let you go. Also give us a view on Hyundai. I mean, it made its T Street debut. The stock was listed with a discount of 1.33% over its issue price. But what do you really make of the growth story so far as this particular stock is concerned, Hyundai growth story, and what are your projections overall in the next coming few months for the company?
To be in a ordinary business with huge sectoral tailwinds rather than a good business which is facing sectoral headwinds. And if you look at the condition of the auto industry right now, they're having huge inventory overhangs. We are halfway into the festive season, and you can already see the large amounts of inventory which these auto companies have been saddled with. They are facing challenges of volume growth, plus they are also facing challenges of margin compression. And when a sector is facing headwinds in the short run, the gains from a listing in that particular space are generally pretty limited.
All right, gains are pretty limited given the kind of headwinds that some of these auto companies are facing. On that note, Gautam, thank you very much for joining us and sharing your thoughts on some of the key issues that we right here are tracking. Thank you very much once again for joining us here on ET Now. Ladies and gentlemen, let's now shift tracks to the
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.